Thank you for all the questions, comments, and feedback. A lot of questions regarding where traders can get the free courses, the 4-step method to high performance trading, and the free audio 7-step daily routine for high performance traders. Create the rituals and routines that will help you get 1% better every day. Bulletproof yourself with your confidence, your daily habits, your approach to the markets, to execute your trading edge in live time, but also to develop the high-performance routines that will help you continuously get better to master the markets. The link for those downloads is below. They're both free courses. Let's get started. G'day traders, Stacey Burke from Stacey Burke Trading, and today we're talking about day 5, Friday. Day 5 in our weekly template, Monday to Friday. We'll talk about a couple of different variations. Today we had red news at 10 a.m. New York time. But depending on whether or not there is major news on a Friday, that can affect obviously the type of setup we're going to get based on how the template of the week has unfolded, and also the timing of the month. We have monthly economic calendar, and obviously there are certain high impact news scheduled throughout the month that the templates can be set up. Obviously, the beginning of a month could be, the first week could be the low of the month. It could be the high of a month in a new monthly cycle, where the month it can be an entire move beginning on that Friday. The first week can put in the low or high of a new month. If we've taken out a previous month's levels, you can go and look at your daily charts. I've talked about major swing points will often occur at the beginnings and the ends of months. So obviously, non-farm payrolls, those types of high-impact news can sometimes be a catalyst, depending on how the template is set up, for a major move on a Friday. You've heard me say there are certain Fridays when the market moves that they are not going to come back. They will close at the extreme into the Friday night. Traders will try and counter trend them or hold on to a loser into the weekend. And as I told one trader yesterday, I do not hold positions overnight. My particular style is that I trade that session and I am done. And I do not leave any positions in over a weekend. The highest probability time that you will usually see a gap on an instrument is a Monday morning. So I would be very reluctant to hold on to a position over the weekend. You could be in large profits and come to a Monday morning on a 100-pip gap on your position, and all of a sudden the market opens and you may be already stopped out with a loss larger than your original stop loss because of a gap, and the gap will fill you at your next best price. Just a different scenario. There are gap trades on a Monday that we will talk about. We haven't talked about that yet, but so obviously, depending on the time of the news on a Friday and the week that calendar of events plays out, can be part of a beginning of a new month. But on a typical Friday, again, we can be looking for 3-day setups, because we can have a trade that Monday, Tuesday, Wednesday, one of the Wednesday or Tuesday, Monday could have the extreme, and they may begin a new Wednesday, Thursday, Friday 3-day setup for a Friday reversal. We'll look at a couple of examples that occurred last week on a lot of pairs. So Friday was a reversal day, and how I approach markets that are distended. So when a market is already, I come for the U.S. session. So obviously traders who are trading Asia or London, they may have had excellent opportunities today during the day in markets that were already strongly trending, coming out of our 3-day setup, and large continuation moves into Friday's session, where we continue to move further along with those trends. So again, the challenge for traders coming along in the U.S. session in a trending market is, how do I approach a market like that when it's already distended out? And I'll talk about my basic approach. So 3 session setups. And then whether or not in that day, on that template, in that session, are we looking for a reversal trade? Are we looking for a scalp, meaning just a low-hanging fruit opportunity? Opportunities may be thin, so depending on the markets, there may not be much happening. And so that may just be a session scalp. Or is it a session trend trade? And we'll talk about a couple of those today as well. So session trades versus a high week, low week, 3-day type of setup that has the potential for obviously a large move that may not come back. So we can get that on a third week, 3 levels of rise, or on a 3 weeks of rise in a monthly time frame, where that third level on a Friday, perhaps on major red news, could be blowing off and reversing and dropping a very large, long way, or blowing off in the trending direction for a very large move. Again, different templates depending on the timing of those weeks in the month. And then obviously Friday runners, which I just talked about. A Friday runner could be the beginning of a new 3-day setup heading into a week. And again, we don't want to be counter trending a market that's going to continue to close into the extreme on a Friday night. So my basic template whenever a market is distended, or I just need to look at the day itself, we'll talk about that, is just my basic high-low of the day template. I use the 1-minute chart, and the first thing I'm looking for is there a textbook perfect chart setup on the day. And so what I look for with those are the normal the peak formation, high and low of the day heading into the U.S. session. Do I have 3 levels of rise or fall? Obviously on the major currencies. Indexes, oil and gold can be slightly different, but I will still look for that 3 levels of rise or fall into the open of the U.S. session. And then the next question is potentially, do we already have the high or the low locked in, which is something that you should be able to identify based on the peak formation. So we'll talk about that, because Asia and London can break out of a range. They can establish a high and low and break out of that range with a peak formation, giving you the thesis in advance that maybe the low of the day is locked in or the high of the day is locked in. If I'm heading into New York, has London already locked in the high of the day? Or is the US still going higher? If I'm looking for the long trade, have they locked in the low of the day? Has London or Asia already locked in the low of the day? Is this going to be a reversal type setup? Is this a trend trade? Whatever that may be, and we'll talk about that. And then the first hour and second hour. So today we had news at 10 a.m. New York opens at 9:30 a.m. and obviously traders who traded London and Asia had other opportunities earlier in the day. When I come to the screen, the first thing when there's 10 a.m. news is that there's a 2-hour window where I could easily look for an opportunity and be done prior to either the news or the New York Open, which when we're in a distended market is an opportunity that I will look for. I'd like to be done before the news, especially if it's considered to be high impact, meaning that I'd prefer to have an easy trade or look for something that's easy, take that trade and just be done and not worry about hanging around for that volatility to stabilize or looking for another trade or a first bounce, depending on what that news release is. So often the first hour may give traders an opportunity. We saw one on the Swiss franc this morning. But that first hour will often establish a high and a low, and then that second hour may give us an opportunity prior to either New York or the news itself. And that brings me to my next point. So I receive a few questions and emails, and traders want me to do trading live for them, and they feel that will help them understand better. And I disagree with that. I go over this, I repeat the same things, because if you are not prepared in advance, if you don't know what you're looking for, watching someone live does not help you. When I am at the screen, I have everything shut off. I am extremely focused, because to me this is zero sum. I want to make money. I am obsessed with mastering my trades and being able to identify where I can put in the most size and make as much as I can. It's not entertainment. And my theory, and I tell this to my kids, if you aren't prepared, if you're not planning and preparing to succeed, to master your sport, your studies, your fitness, your relationships, whatever that may be, you are planning to fail. So if you don't know what you're looking for, then you shouldn't be trading. And I hammer that home over and over again. I focus on setups, and it's not rocket science. I know that offends some people, but I look for sell high setups. I look for buy low setups. I look for reversal and trend trades, and I look for easy bounce, first bounce, momentum trades, or reversals all based on timing and the high and low of the day. That's it. There's about 6 trade setups that I have, but for the most part, there's 3. Sell high, buy low, and a trend trade. That's essentially it. So you need to know what you're looking for. You need to pick 1 or 2 instruments, plan out your trades, know your levels, know how to execute, how that will be executable in live time. I repeat this: the clock, the clock, the clock, the clock. The end of a 15-minute cycle, the end of an hour, 30 to 45 minutes typically will lock in one of the extremes, maybe the high, maybe the low. That means the next hour could be a trade. Maybe, if the template is set up, and that may be a 30-minute trade as we head into the New York Open. I had one of those on gold. We had one on the British pound. We had them on the indexes today. These are textbook setups that show up over and over again. They are playbook trade setups. They are not hindsight. They are repeatable, scalable trade setups. And then the next thing is understanding how to do that in live time, how to identify the setup and then be patient, pay attention to the timing, the level, obviously the price action, know that you're going to execute and get in at the best possible fill, how to manage your risk, know where you can identify the level where that trade could fail, and also how long that trade takes in terms of the time. So there's a time expiry or a time decay factor to any trade that I'm in. Obviously, most of these trades are designed that there's trap volume and they should, be over with usually in 15 to 30 minutes, unless we are on a level 3 and that market is going to continue to go the entire session, which we had on a Wednesday with obviously gold, explosive move, Tuesday as well. Those are all in trades. They are not coming back. Then being able to manage yourself in the moment, know when you should stop. So you take your trade. I know that a lot of traders like to keep trading. They're looking for pips. They want to keep trading. They want to scalp in and out, in and out. And my thesis is this for myself: where can I get in? How much size can I put on those trades and get as much as I can in that trade and then get off the screen and then do it again the next day? I don't want to hang around and keep scalping because I know that the algos, the high frequency trading, I know that after an hour that the market will change. The algorithms will come into the market and start increasing the volume or buying and selling in those markets. The volume, as it gets thinner, the algos kick in. So lock in the profits and stop. Most traders will end up giving back whatever profits they make or engaging in impulsive, irrational, emotional behavior outside of their trading plan. So I will, go back and say this again. Know in advance what you're looking for. Know what you are looking for. Otherwise, you're just going there trying to get pips or trying to, buy the low or sell the high or buy the trend or sell the trend, whatever that is. However you trade is up to you. But know in advance exactly what you are looking for on the day. So we had markets that have been trending and distended out. So obviously, we're looking at the Canadian dollar. I'm using the 1-minute charts. Now, you can bring these up on your trading view, whatever you want. I use New York close charts. My charts roll over at 5 a.m. New York. That is the beginning and the end of my day. That's what I use. I don't care what other time frames other traders use. You can use London. You can do whatever you want. The day starts and ends for me on New York time. Daylight savings time, I don't care. I use New York time. Whatever time it is in New York, it's New York. I've had traders ask me about the indicators. You can download sweet spots for MT4, okay? And for my normal currency settings, there you go. I just use 10 lines above and below just to so it doesn't use any more CPU, 100 and 250. So major round numbers and quarter levels. This is for MT4. I don't know what you can use for TradingView. I know several traders have told me there's indicators you can download. The iSessions indicator, you do not need this, but if you want to use it, I use iSessions, again, a free download. My timings for Asia are 3 to 6. Europe 9 to 12, which is 3 to 6 is 8 to 11 p.m. New York time. 9 to 12 for the Europe London window, and 15 to 18. So 9 to 12 is 2 a.m. to 5 a.m. New York time. And 15 to 18 is 8 a.m. to 11 a.m. New York time. Now, again, you don't really need that. You don't need this indicator on my live chart. I often will just use a blank chart. And so when I look at this, when I'm looking for, if I come to a day, we come back and we can look at the week on the Canadian dollar, for example. We'll just put up our high-low for the week. Now, we talked about the 3-day setup. We had a high of the week sell on Thursday that came down back to the low of the week. So again, we talked about day 1, day 2, day 3 on Tuesday, Wednesday, Thursday. And then we had that market continue to go lower into the beginning of the day. So when I come to the screen this morning, we've already broken through yesterday's low. Is the higher low potentially locked in already? We have a downward trending market. They've gone up and put in peak formation high in the Asian session. Then the market has dropped down 25, 50, and not quite gotten 75 pips from that peak formation high. Now, I will repeat this. This is not hindsight. You should be able to go to the screen and look at your charts and identify an instrument and have a thesis based on the template if you're trading it. Now, I didn't trade the Canadian dollar. This is not an ideal template, but this is a low-hanging fruit opportunity heading into the beginning of the U.S. session for the trend trade to continue the move back through the low of the day. Front side, we have a trend line break and a retest at the open of the 12 candle window. The New York Open comes up and hits stops before continuing down after the major red news. Now, you can look at your charts, but the point I'm emphasizing on the Friday when we have a distended market, so obviously Asia traders had the opportunity. We had 3 levels of rise from the previous day's low. The market goes up from level 1. So if you haven't seen the videos on 3 levels of rise and fall, you can just go into the YouTube channel. There's plenty of videos. We go up from level 1, level 2, and the market tries to go into level 3 before breaking down and consolidating and breaking through the low of the Asian session. This breakout, Asia puts a low in. So in our 12 candle window, I'll just zoom this in for traders. You need to be able to mark your levels and understand what you're looking for. It breaks down through the low of the Asian session. If our thesis is that the high of the day is locked in, the next thing I want to ask myself is the low of the day locked in? No, this is in the middle of the move. This is in the middle of the move. And we are now, thesis may be as well as the U.S. session locking in the low for a reversal. This is not a reversal setup. This is a mess. I don't know what this is. Some traders may have traded the Canadian dollar today. I did not. But this is an example, though, of peak formation high in a distended market. They've broken the previous day's low. We have new shorts in the market on other time frames. Peak formations are up in a downward moving market. We have a trend line break heading into our U.S. session for a continuation short trade, low-hanging fruit. That's all that is a continuation trade in line with the original trend. And our session thesis is that the high day is locked in. They've traded back into the lower peak formation highs above major round numbers to continue making a lower low. The low is not yet in place. It might be now, don't know. But this is why I look at the 1-minute charts. I can clearly see what type of template I am dealing with on the day. The Swiss franc was a fantastic opportunity for traders who were looking at this pair. It was broken down quite strongly in line with the euro. So these two pairs will trade very much similar, obviously in opposite directions, but have a very strong correlation. and we're in a very strong market on the euro. And so this market broke through the low of the Asian session. Again, thesis being that peak formation above 50 is locked in. We have volume trapped. It continues to break down and move lower. Peak formation low that rolls over and fails. The minimum distance I would be looking for if I was shorting this would be an expansion of that last peak formation high breakout. We head into our US 12 candle window still in a strongly dropping market. Now, when I'm approaching a market like that, if that is something that interests me, first 15 minutes will be a false move. Now we get our continuation to put in a low of the session. The market pulls back up into that first little peak formation, and at the end of our 15-minute bar, the market continues to break down and move lower and blows off for the capitulation in the first hour of the US session. So again, a collapse, easy capitulation trade, still on the front side of a weak market that is strongly trending down. So coming back to the original thesis on the day, we have major news at 10 o'clock. If traders have not been in that market and we see that capitulation and collapse, be very suspicious that that will not be revisited, because they now have traders counter trending and going long in a very strongly downtrending market. So come back to our thesis again. First hour puts in a high and a low. If that's our peak formation high where the capitulation blew off and we have our peak formation low, we then get a creeping trend down into the low heading into the new hour. We see that second hour reverse, and we come up three levels of rise, 25, 50, and 75, to pin up into traders who shorted the capitulation. So again, three levels of rise or fall. We have a market that now in the second hour has come up three levels of rise, hit the stops, broken down, and given us our M structure at the New York Open prior to the major news. So we now have a market that has locked in potentially the high of the session and broken down and gone into consolidation. The next major event on the calendar is at 1700 or 10 a.m. New York. We have major round numbers. The news is released and we get three pushes into our double zeros for the continuation trade back down to the low of the day. Timing, the news, no major explosive candle. We're already down low, but traders looking to counter trend this. We don't see any explosive move on the major red news, but we do see the stop hunt after three levels of rise and the continuation trend trade back in line with our original downward moving market. And so another example of do not counter trend a market that has been trending strongly over the last few days. This is not a reversal setup. And you'll notice when we zoom out on our US session, we have a head and shoulders type of peak formation, three peaks. Again, three peaks from the low of the day. And a session three peak stop hunt and reversal after news for the continuation trade back through the low of the day. Again, Japanese yen thesis is that the high of the day is locked in. We have a market that has trended strongly all day long, put a low of the day in the London session, and then come up three levels of rise and put in a M structure under the double zeros within the gap itself prior to the US 12 candle window. So again, go back and study the 100 pip box video. The upper level is our area for selling and the lower level for buying. They potentially now have locked in 75 as a high of the day level. They put in the lower peak formation prior to the 12 candle window at 75 and then proceed to auction lower. That movement lower breaks structure on the inside, but it also triggers hourly shorts into the market. Hourly shorts into the market. These lows are the lows of hourly bars. Their stops most likely will be at the high of the hour, the new hour in the session. They break out, they trigger shorts, maybe 4-hour traders, other time frame traders, whatever. We already have end of day traders short in the market. And then we get our second hour and the New York Open stop hunting through the high of the session and into that 75 level before, similar to the Swiss franc, breaking down and giving us our micro M structure. This is all prior to the news. And then breaking down 40 pips roughly into the news candle itself for a 3 peaks push back up into shorts after the news, and then the continuation trade after 3 peaks into the shorts for the continuation trade back down. So for the hindsighters out there, again, we're waiting for news. We get a 3 peak formation and an engulfment in a strongly downtrending market for the continuation trade back through the low of the day. Now, the British pound was an excellent chart, and again, thesis right off the bat is that the Asian session has put the low of the day in. We're in a strongly trending market, so if we just back this up and look at our 15-minute chart, we can see the explosive movement on Thursday and the continuation higher today in the 3 sessions. So looking for textbook simple stuff. This was one of those textbook perfect setups. Now, people say, how do you know where the high and the low of the day is if the high and the low, if the day isn't over? When I come to the U.S. session at 7:59 New York AM time, any chart, if it's at the high or the low, that is the high of the London session. That is the high of the day. I repeat that. That is the high of the day. If you're trading London and you come to the screen for the Europe-London window, 1:59 a.m. New York time, 1:59 a.m. New York time, whatever that last minute is, if that's the high or the low, that's the high or the low. U.S. session opens and that first hour puts in a high and a low. They extend the range. They go higher and they put in a low. They trade back up into that high in the first 45 minutes before locking in a micro M structure inside of our pin high. And then our second hour starts and we get our engulfment in the first 15 minutes above 75. So again, our low of London, our higher low where that move began, is in the gap time. They start from the previous day's breakout high and lock in 25 as the potential new low of the day, and the previous day's high breakout, which is essentially the same thing, and they begin their 3 levels of rise, 25, 50, and 75. We get up into our third level. They lock in the high of the day. The second hour opens. In that first 15 minutes, we already have our high in place. We want to get filled above the numbers. I repeat this phrase over and over again. Once I know I'm getting in, I get in, and I want to get filled at best or better than the numbers. And sometimes you can't get that, but I want to get filled before the numbers with the spread. There's your stop anywhere above these peak formation highs. And the thesis is targeting back to where that move began. First area that could fail is where this bounce begins, the pump and dump begins. The next obvious target is beneath those lows. So we have a possible breakout area where the market could fail, and this is where timing and paying attention to how price behaves comes in. They come down and the market is continuing to move lower in the New York Open, and it blows through the low. 1 push, 2 push, 3 pushes before beginning its move back up. Now we're in a strongly trending market, but we had a textbook perfect setup, high of day, 3 levels of rise trade. Peak formations locked in the high in the first hour. Second hour gives us our trade. And this is an example of where the equity market opens in the middle of a move and continues to take traders in the wrong direction, but also is a catalyst for completing the existing short trade. 3 levels of rise, get filled above the numbers for a 50 pip, low-hanging fruit, easy trade, high-a-day setup. Now the euro obviously shorted back, but this was not what I'd considered an ideal candidate because we're still on the front side of the move and comparing the euro and the pound, you can see the difference in the two charts. Pound is, we'll just bring this back together. We have a market that's gone up and consolidated in a 50 pip box and then gone 3 levels of rise, put in peak formations for the reversal right at the high of the day for a vertical move. The euro is still in a trending type of template. So obviously it still came back, not quite 50 pips, but it came back into the higher level longs. And there's an example of where it pinned down into the breakout level before continuing its upward moving trend. So again, looking at the overall pattern of that trend, not even really interested in trying to short that, but the day template itself still came back into higher level longs. And we'll go back and just look at this. The last minute is the high of the day. The first hour of the US 12 candle window puts a high in, puts a low in. The next hour opens and trades back up into the high before engulfing and breaking down. And even if traders, again, same scenario, if they wait for that confirmation to be locked in and we get filled, you're getting filled above the numbers. We have low-hanging fruit caught in the middle of a box. That's an obvious giveaway they're going to come back. And our next target potentially is where that move began. It didn't get there. It trades down into that first 15 minutes of the New York Open, takes out that higher low, and trades into the breakout before reversing and continuing the long direction. So not saying this is an ideal trade. You're shorting into a strongly moving bull market. The pound itself was a much better, cleaner setup because of this 3 levels of rise. High of day, high of week, strongly moving market, but we have a textbook perfect rectangle, a high of day locked in, 75 for a 50 pip vertical move. West Texas, similar. We have our 3 sessions of rise. High of day, low of day. Now, I did not trade oil today. I just not comfortable with taking this trade, but the same principles apply. We have a high of day and a low of day. First hour puts a high and a low in. The second hour opens and trades up into the high before coming down and dump and pump into the New York Open for the explosive move back through the high of the day. A lot of wiki messiness. Third hour takes traders higher. So again, a 1, 2, 3 on the hourly chart before locking in the high and breaking down. And on a Friday night, this market, you can look at the price action. It's not quite clean. The overall template still gave a nice high of day opportunity for traders who wanted to wait for that breakout and peak formation to be locked in. We have obviously 3 levels, 100, 100, and 100. So thesis is, on this day, we have a market that's come out of a trending breakout. The low of the day is potentially locked in. And our next low of the day becomes the London session, which they have just taken out. They break out the high of the day, lock in the high in that third hour, 45 minutes into the third hour, off double zeros, breaking down, trading, and fading all the way through the low of the London session. The all session fade. Those are hard sometimes to hold on to. The price action is wiki as opposed to a vertical explosive move, but still obviously a lucrative opportunity for traders who traded oil today. Gold was an opportunity for traders. Again, gold has been trending very strongly, but the template on the day formed, we had a vertical move, which put in a high prior to the London 12 candle window. They proceeded to break through that high and extend the range before breaking down. We're up above 50. Thesis is that that's our high of the day, and the high of the day may be locked in. We get 3 levels of rise into the open of the first hour of the U.S. session. 75 is our high of day. The market, they bring it up, they lock it in the gap, and they proceed to begin the march in the first hour, 3 levels of rise. The end of the hour engulfs and pulls back before breaking down 15 minutes into the beginning of our second hour. The next 15-minute bar opens above 25 and accelerates the move back down through the low of the day. So again, thesis is once we know we're locked in, we've locked in the high, best fill. I'm below the numbers, but I'm above the middle structure. Timing wise, we're at the end of our 15-minute bar. Our peak formations have locked in with a 3-push pattern. Initial entry has a 1-bar stop, targeting where the 3 levels of rise began. So even if we just target numbers where the breakout begins, we can go 25 to 75. But traders who recognize this short trade rate at the high in that 50 area had an opportunity for 75 plus pips. But the consolidation, the high and low pattern, this high and low pattern, and then 3 levels of rise back up into the high of the day, the M structure for the vertical capitulation into the New York Open, taking out the low of the day before coming back on news and trading up between 50 and double zeros. An example again of a trading range heading into a Friday night, they might close this above the high and continue that long trade on Monday morning, day 1, day 2, day 3, Thursday, Friday, Monday. That continuation explosive move on Thursday, but they've gone up, put a high in place, hit stops, brought it up 3 levels of rise into the open of the second hour for the vertical capitulation short trade. The indexes were also excellent opportunities. So the point I'm emphasizing today is whenever you're in a distended market or you can't read your bigger time frame charts, I use the 1-minute charts to establish a thesis on the day if there's a clean opportunity for that session. So we come back to our original premise. They've broken out of the Asian range and gone higher. Thesis in a strongly moving upward market is that the low of the day may be locked in. London puts a high in and reverses and breaks it down. Reverses and breaks down. They break through. This is the low of the London session. They trade through that and trade back up into the breakout. 3 things markets do. They break out, they pull back, and they trend. They break out, they fail, and they reverse. Or they trade back and forth in a trading range. We get our pump, the beginning of our pump in the gap time in that last hour heading into the US 12 candle window. They proceed to auction back up into the peak formations of the breakout London session before breaking structure on the inside. So again, front side, back side. They trade back up into that peak formation high. Now 45 minutes in, we have a market now that has potentially locked in the high, and the last 15 minutes of this hour, the market breaks down and puts a micro M structure in. So we talked about this the other day. The news is at 10 o'clock. The index is open at 9:30. And this is an opportunity in that second hour, in that first 15 minutes, for a market that offers us a short trade opportunity heading into the open of the session. That's over 75 pips back through the low of where that breakout began, the pump and dump, but also coming back to where traders broke out in Asia. We have breakout traders in the market that have not been stopped out at the high of the session. So they've gone long and there's a gap there where those traders are still in the money. They haven't been hit. And this is an easy short trade after they've locked in the high. So again, coming back to the template, Asia puts the low in place. London puts the high in place. There's our rectangle. It breaks down and trades back up into the breakout. They lock in the high. The second hour gives us our trade back through the low of the day. Traders who held on to that, they could have took some off and then at the open maybe re-entered that trade or held on to the whole thing in hopes that they didn't get pinned or stopped out on that original position. So again, market broke down, traded back up into the breakout, right into the open of the second hour for the move back through the low of the day. Look at your charts. The NASDAQ was the same. Asia puts a low in before auctioning higher prior to our 12 candle window. That's the high of the day. Europe and London trade higher before reversing and breaking down in the gap and taking out the low of the session. Breaking down and trading back down, making new lows and lower highs. They trade back up into the breakout. First hour puts a high and a low in. They break structure. We are now on the backside of the move. Front side, backside. They break down, trade back up into the breakout. The second hour begins. We have our micro M structure, and that market proceeds to drop 100 pips. prior or into the open of the session. So again, this is all before news. You could be done and dusted. This is the type of opportunity that you can look for on a day when there's 10 a.m. news. Dow Jones 30 puts a low of the session, low of the day in an Asian session. We have our high. They trade through the high before breaking down. Thesis is now that the high of the day may be locked in. They make lower highs and lower lows below the breakout. They trade back up into the breakout on the front side. They break structure. Again, you can zoom in on your charts. We'll blow this up. They break structure and then trade back up into it, into the open of the second hour before breaking down and continuing to break down into the open of the session for a couple hundred pip move. I want to emphasize these are templates. These are templates. All of these are templates. So you should be able to go and look at your charts on a given day and identify whether or not you recognize a template. And on a day that markets are distended out, or we've been in strongly moving markets and they still appear to be trending, there are still opportunities. Obviously, you can see this market has gone back. Nasdaq's still back at the high of the day again, but not after a 100 pip stop hunt through the low of the day into the open of the U.S. second hour. So there's opportunities, but you need to be able to identify the best templates. And when markets are distended and hard to read on other time frames, I just go back to my go-to, my 1 minute chart. I look at the day itself. Do I have an opportunity potentially setting up on one of these instruments? There was 5 or 6 textbook perfect opportunities today for session trades that offered 50, 100 plus pips to be done before the major red news, 10 a.m. So again, that's 2 hours into a session. There's going to be opportunity prior to the news on those days. Hopefully that makes sense, traders. Again, knowing what you're looking for, being prepared, knowing in advance what exactly you're looking for and whether or not you have an opportunity. Identify the best setups and levels on the instruments that offer you those. Pick 1 or 2. Know how you're going to execute that trade as it unfolds for you, if it does, in live time. How you're going to manage it. Have the confidence to hold it. Know how to manage your risk. If it's scalable, know how you could scale in and where. And then know how to manage yourself once that trade has either hit its profit target or it's approaching its profit target. Locking in the money and knowing when to stop trading so that you don't do any damage after executing flawlessly a perfect best trade setup. So we've had a tremendous week of opportunities, and no doubt they're going to continue because we certainly have volatility in the markets, and lots of opportunities have happened this week. Several traders have had, as they've emailed me, the best trading weeks they've ever had. And as I say, focus on what you need to improve for next week and make it your best trading week ever. Keep it simple, traders. Stay focused, get 1% better every single day, and may the markets go with you.